Okay, see, this transaction is covered, HF. Then, now see, transaction number 5, exempt transfer, right now? Transaction number 5, transfer of any capital asset by an individual or HUF. Who is transferring the asset? Individual or HUF. By way of gift, will, inheritance or irrevocable trust. So if an individual or HUF is transferring any capital asset by way of gift, will, inheritance or irrevocable trust, then that transfer is also an exempt transfer. This is also exempt transfer. Under which section? 47. Capital gain will arise, will not arise. Will not arise. So this individual or HUF is not liable to pay any tax on the capital gain if he has transferred the asset by way of what? Gift, will, inheritance or irrevocable trust. Matlab, meaning, if I am an individual, if I am an HUF, I can transfer my asset to you. I can give you gift. I can give you by way of will, inheritance or irrevocable trust. Then the transfer made by me will not attract any capital gains in my hands because this transfer is exempt. For example, if Mr. A is there and Mr. A has transferred the asset by way of gift, will, inheritance or irrevocable trust to Mr. B, then this transfer is exempt in the hands of Mr. A. A will not be liable to pay any tax on this transfer. Okay, no capital gain. So for example, capital asset was acquired by Mr. A. It was acquired in 2009-10 for rupees 1 lakh. And when it was gifted to Mr. B, that capital asset was gifted to Mr. B in 2017-18. Okay, that time the fair market value of that capital asset was 1,60,000. So tell me, there is an appreciation of, and if cost of improvement is also incurred, then the appreciation will reduce, yes or no? So there is an appreciation of 60,000. This appreciation will be taxable for Mr. A or will not be taxable? Why? Because in 17-18, Mr. A is transferring the asset but is not receiving 1,60,000. If he would have received 1,60,000, then 60,000 gain would have been realized. Understanding? Then 60,000 of gain would have been taxable in his hands. But since he is not realizing that 60,000 gain not coming in his pocket, it should not be taxable for him. So in 17-18, when Mr. A will transfer, at that time the transfer is an exempt transfer. Understanding? Now, Mr. B will later on sell this asset. Mr. B sold the asset to Mr. C. So this was sold in the previous year, 25-26. And the selling price was, example, 3 lakh rupees. So what is the appreciation happening in the hands of Mr. B? 1,40,000. This entire 1,40,000 appreciation will be realized by whom? Mr. B. Only 1,40,000 will be realized for Mr. B, or this 60 will also be realized by Mr. B. So both should be taxable for him. So whenever Mr. B will sell the capital asset, B will calculate the capital gains. What will be the full value of consideration? 3 lakhs. Transfer expense? Nil. Net consideration? 3 lakhs. What will be the cost? The cost to the previous owner will be deemed to be the cost in the hands of assessee, Mr. B, as per section 49(1). Because Mr. B has acquired the asset by way of gift, will, inheritance or irrevocable trust, modes specified under section 49(1). So these are the modes specified under section 49(1). By way of the mode specified under section 49(1), Mr. B has acquired the asset, and for this asset the cost of acquisition will be cost to the previous owner. Whatever cost in the hands of previous owner is there will be deemed to be the cost in the hands of the assessee. Any cost of improvement incurred by the previous owner will also be deemed to be the cost in the hands of assessee. Yes or no? Period of holding of Mr. B will also include the period of holding of the previous owner. Indexation will be available for his period only. Indexation only for this period. But if the judgment of Manjula Ben is applied, then indexation will be available for earlier period also. Yes or no? Understood? Sure. So if you understood this transaction, this one. Which transaction? Transaction number 4. Yes or no? HUF to member. There also 49(1) got applicable. Here also in this transaction also 49(1) will be applicable. So here now in the fifth transaction, this transfer is exempt in the hands of individual HUF. Yes or no? But here also you have to refer what? Section 49(1). You will have to refer section 49(1). Just a second. You have to refer what? Section 49(1). So 49(1) will be applicable in the hands of individual HUF? No. The person to whom the asset is given, the transferee, in his hands 49(1) will be applicable. His cost will be cost to this previous owner. Whatever will be the cost in the hands of this individual or HUF will be deemed to be the cost in the hands of transferee. Yes or no? Previous owner. Who is the previous owner? This individual or HUF who has transferred the asset. For this individual or HUF, the transfer is exempt. But whatever the cost will be there in the hands of individual or HUF will be taken as cost in the hands of the transferee, the person to whom the asset is transferred. So along with this also you are supposed to refer what? Section 49(1). Will you remember this? Sure. Come to the questions now. Question number 1, 2, 3. All the questions done? 3, some part is remaining. Yes or no? Come to question number 4. 4 is also done, no? Okay, then come to question number 5. Question number 5. Come on. I am reading the question. Mr. Sarthak entered into an with Mr. Jai Kumar to sell his residential house located at Kanpur on 16th of August 2025. Wait. This question we cannot do right now because there is an wait. This section 54 is there. Shiva purchased a house. Value. Come to this question. Question number 7. Come to question number 7. Mr. Shiva purchased the house property on 15 February 1979, meaning prior to 1st April 2001, for rupees 3,24,000. This was the actual cost. In addition, he had also paid stamp duty at the rate of 10% on the stamp duty value of 3,50,000. So that time the stamp duty value was 3,50,000. On that 10% stamp duty is paid. So stamp duty is paid at the time of purchase. So it will be purchase related expense, will be added to the actual cost. Yes or no? In April 2008, Mr. Shiva entered into an agreement with Mr. Mohan for sale of such property for 14,35,000 and received an amount of 1,11,000 as advance. However, the sale consideration did not materialize and Mr. Shiva forfeited the advance. So Shiva received an advance in which year? April 2008. Amount of advance was 1,11,000. This advance was forfeited. So can I say advance money received and forfeited prior to 1st April 2014? So this will be adjusted under section 51. That time it was not taxable under the head IFOS. I've already told you, no? Okay. Next one. However, the sale. Okay. In May 2015. In May 2015, he again entered into an agreement for sale of the said house. For how much? He again tried to sell the house in May 15, meaning on or after 1st April 2014, to Miss Deepshika, and received how much? 1,51,000 as advance. Now he is getting an advance money of 1,51,000. However, as Miss Deepshika did not pay the balance amount, Mr. Shiva forfeited the advance. This time 1,51,000 is forfeited. And this is received and forfeited on or after 1st April 2014 will not be adjusted under section 51 out of the cost. Why? Because it is on or after 1st April 2014, in the year 1516 only, it would have been taxed under the head IFOS. Yes or no? Okay. Next. In August 2015, Mr. Shiva constructed the first floor. Shiva constructed by incurring a cost of rupees 3,90,000. What is this 3,90,000? Cost of improvement incurred by Shiva. In November 15, 2015, 25, Mr. Shiva entered into an agreement with Manish for sale of such house for rupees. So 30,50,000 is a sale consideration and received an amount of rupees 1,50,000 as advance through an. So the date of entering into the agreement, can I say this is the date of sale agreement? As on the date of sale agreement, the property is being sold for how much? And out of this sale consideration, 1,50,000 is received by way of account pay check, meaning prescribed modes. So whatever will be the stamp duty value as on 15th November can be taken for section 50C. And now they are saying Mr. Manish paid the balance entire sum and Mr. Shiva transferred the house to Mr. Manish on February 2026, meaning this is the date of registration. Mr. Shiva had paid the brokerage at the rate of 1% of sale consideration to the broker. So this brokerage will be paid at the time of sale. This is a transfer expense. On April 1, 2001, the fair market value of the property is given and the stamp duty value was 10,70,000. So this is the stamp duty value as on which date? 1st April 2001. So your fair market value as on 1st April 2001 cannot be more than this stamp duty value at the time of taking the cost. Yes or no? Next one. Further, the valuation as per the stamp duty authority of such house on 15 November, date of sale agreement. This is the stamp duty value. And as on the date of registration, this is the stamp duty value. Which stamp duty value you are going to take? 39 lakhs or 41 lakhs? 39 lakhs. Why? Because as on the date of sale agreement, out of the sale consideration, some part of the sale consideration is received by way of prescribed mode. Yes or no? So hence the stamp duty value as on the date of sale agreement can be taken for section 50C. Take this 39 lakh and ignore this one. Okay. Now compute the capital gains in the hands of Mr. Shiva. Also compute the tax liability under section 112, assuming that the basic exemption limit has been fully exhausted against other income. See, right now I will just highlight this information. Okay. this information. Later on I am going to discuss about this. But first of all, can you calculate the capital gain and tax? A similar type of question we have solved. So start. Let's see. Here there is no exempt transfer. Shiva is purchasing and Shiva is finally selling. Yes or no? But advance money received and forfeited is given in the question. Start. Very easy question, I am telling you. Very easy. Don't talk. Done. Should I start? No. Yes or no? Do it fast. Mr. Shiva. Individual R over. And dash. Previous year 25, 26. Assessment year 26, 27. Computation of capital gains. Now, full value of consideration. For that, a working note will be made. Working note less transfer expense, there or not there? There. Brokerage, no? Transfer expenses. How much brokerage? 1%, no? Less what? Cost of acquisition. Less cost of improvement. For cost of acquisition also we'll make one note. Okay, no? Cost of improvement is there, no? So now working note 1. Full value of consideration. What was the sale consideration? Sale consideration is 30 lakh 50,000. The sale consideration is lower than stamp duty value. Stamp duty value, 2 dates. Date of sale agreement, which was 15th of November if I am not wrong. Date of sale agreement is 15th November, no? 15th of November 2025. What is the stamp duty value? 39 lakhs. Date of registration was February 28th February 2026. So the stamp duty value as on this date was 41 lakhs. Which stamp duty value you are going to take? 39 lakhs. Why? We are going to take this stamp duty value and we are going to ignore this. And we'll write here, since part of the consideration, that is 1,50,000 was paid on or before 15th of November 25 by way of prescribed mode. Therefore, SDV as on 15th of November 25, date of sale agreement is to be considered. Done, sir? So now tell me, what is the difference between stamp duty value and sale consideration? Difference is 8,50,000, no? 8,50,000 everyone. This difference is more than what? So difference is more than 10% of sale consideration, that is 3,05,000. Therefore, section 50C will be attracted. 50C will be attracted, and FVC will be equal to stamp duty value, which is 39 lakhs. Done, sir? Sorry, yes, difference is 8,50,000, no? That 8,50,000 is more than 3,05,000. Done, no? 39 lakhs. So here we'll write 39 lakhs. Everyone understood this? Easy? Now, 1% brokerage. 1% of what? 39 lakhs, no? Or 50,000. Brokerage is always paid on sale consideration, So that is 30,500. Reduce this. 38,69,500. Now cost of acquisition. Again we'll do a working note. Working note 2. So working note 2 for cost of acquisition. So what will be the cost of acquisition? Come on, tell me. A, actual cost, and actual cost is 3,24,000 plus 10% of 3,50,000, because stamp duty value at the time of purchase was 3,50,000 in 1979, and of that stamp duty value 10% stamp duty you paid at the time of purchase. So that is your purchase related expense. That will increase your actual cost. So how much is your actual cost? 3,59,000. Or B. B is fair market value as on 1st April 2001, which was 11 lakh. But remember, this fair market value cannot be more than stamp duty value of the property as on 1st April 2001 if available. Is it available? 10,70,000. So this or this, whichever is lower. So what is lower? 10,70,000, no? And 10,70,000 or 3,59,000, whichever is higher. So higher of A and B is your cost of acquisition, which is 10,70,000. But out of this, you are going to reduce what? Advance money received and forfeited. In which year? First one was advance money received and forfeited on what date? April. In April 2008, and one was in May 2015. Yes or no? So April 2008 adjusted under section 51. Done, sir? This is adjusted under section 51 from the cost 1,11,000. Done? And this is not adjusted under section 51. Adjustment is not allowed. Why? Since already taxed in previous year 15-16 under the head income from other sources. So this one will be allowed, this one will not be allowed. Here it will be nil. Therefore ignored. Hence it is taken as nil. Do you understand this? So what is the total now? 9 lakh This will be your cost of acquisition. 9,59,000. Was there any cost of improvement? How much? 3 lakh. Reduce all this. 25 lakh. 20,000. This is your taxable LTCG. Under section. And this will be taxable at what rate? 12.5%. Are they telling you to calculate the tax also? But why are you calling this long-term capital gain? Because the period of holding of your property will start from which date? February 1979 to 20th February 2026, date of registration. Hello, which is more than 24 months. And if it is more than 24 months, the gain is long-term gain. Done, sir? So if this type of question will come, your answer should look like this. Okay. Now therefore, computation of tax liability. Computation of tax on LTCG under section 112. So LTCG without indexation. How much was that? 25 lakh 20,500, no? 25 lakh 20,500. Done, sir? On that, tax is calculated at what rate? 12.5%. How much? 3 lakh 063. This will be your tax 1. Now, are you going to calculate the LTCG with indexation also? LTCG with indexation. Mark this question important, na? This question will come in the exam. That's what I feel. If it does not come in the exam, then your luck, bad luck. Comes in the exam, then good luck. Okay. LTCG with indexation. First of all, we'll take full value of consideration. Yes or no? What was that? Same thing, no? What I'll do, copy paste only. Copy paste. Till here. 38,69,500. Till here everything is same. Only the index cost of acquisition and cost of improvement will change. Done, no? I don't know whether you are understanding or not. Less what? Index cost of acquisition. So what was the cost of acquisition, guys? 9,59,000. Yes or no? Into CII of 25-26, year of transfer, that is 376, divided by CII of year of acquisition. Sir, acquisition was in 1979. So that year index will not be available. So what is the base year index? 100. That we are going to take. Divide by 100. Yes or no? Tell me how much? 36 lakh 5,840. Done, sir? Less index cost of improvement. What was the cost of improvement? 3 lakh 90,000 into CII of transfer year 376 divided by CII of improvement year. When that improvement was done? 15-16. What is the CII of 15-16? 254. Tell me. How much? 323. Everyone correct? Calculate. Loss will be there. 3 lakhs 13,663. So this is your long-term capital loss. So tax at the rate of what? 20% on capital gain without indexation will be how much? Nil. Done, no? There will be no tax. So this will be your tax 2. This was your tax 1 and this is your tax 2. Now, therefore, tax on LTCG under section 112. This is lower of what? Tax 1 and tax 2. Tell me how much? Nil. Understanding? And one very important note you are supposed to write here. What note you are going to write? Tell me. This long-term capital loss which has come, will it be allowed as set off or carry forward? This time you don't have a loss. This time you have a gain. Gain of how much? 25,20,500. That loss is just calculated. But that loss will not be allowed as a set off or carry forward. Yes or no? I have already done this thing in one of the questions which we solved yesterday, if I am not wrong. Yesterday or day before yesterday. One question I had solved. In that one question I have already told you this. The loss which you are calculating right now will not be allowed as a set off or carry forward, because this year you don't have a loss. Without indexation, gain is how much? 25 lakh 20,000. That you have to show in the calculation of your total income. Getting my point? So, the long-term capital loss. The long-term capital loss as above. 3,13,663 shall not be eligible. Eligible for what? Any set off or carry forward. The same needs to be. Fill in the blanks. To be ignored. Done. Same needs to be ignored. Done, sir. This was your question number 7. How was the question? Nice? Huh? Did you mark this question important? Okay. Now mark the next question also as important. Question number 8. Test your knowledge. Hey, do you remember one thing? That we did one section 55 AC, listed equity shares. 3 assets are there. How many assets? 3 assets. Number 1, listed equity shares. Number 2, units of equity oriented mutual fund. And number 3, units of business trust. If their period of holding is more than 12 months and they are transferred, that means they are long-term assets. Yes or no? And they are transferred. They are transferred through a recognized stock exchange. At the time of transfer, STT must be paid. But if the listed equity shares are there, then STT must be paid at the time of acquisition also. Yes or no? Then whatever capital gain you are going to calculate will be a long-term capital gain, which you have to calculate under section 112A. How will you calculate that long-term gain? Full value of consideration minus transfer expense, you will get net consideration. What will be the cost of acquisition? Actual cost. If these assets are purchased on or after 1st February 2018, if you remember. Hello? But if these assets were purchased prior to 1st February 2018, then the cost will be determined as per 55 AC. What will be the cost? Actual cost. Or fair market value as on 31st January 2018, whichever is higher. But your fair market value cannot be more than selling price, if you remember that. Yes or no? Hello, sir? So how will you calculate that fair market value? Usually that fair market value as on 31st January 2018 is given in the question. But in this question, no, which you are going to see, as on 31st January 2018, These shares were traded in the market and the trading prices are given. Highest of trading price, lowest trading price, average trading price. Can you see in the question? See? So in that case, as on 31st January, you are always supposed to take highest trading price. Highest trading price as on the date of, as on 31st January 2018 is treated as what? Fair market value. So three amounts are given. Three fair market value, three values are given. Out of these three values, which will be your fair market value as on 31st January 2018? Highest trading price. Yes or no? Highest trading price. Done, sir? What if the shares are sold? This will be 700. And what if the units are sold? Units of equity oriented mutual fund. Then it will be 750. Understanding? So do you know how to calculate this capital gain? In one question we have already solved. Question number 1, Mithun. Go check. Question number 1, test your knowledge. Mithun. That question we have solved, no? So meaning you must be aware about that concept. That same concept is applicable in this question. But instead of fair market value directly given in the question, they have given three different values as on the date of 31st January. Yes or no? So out of these values, which value will be taken as fair market value? Highest trading price. Yes or no? Now take this and calculate. Give me the answer. Do it first. So now you are supposed to calculate the capital gain for equity shares also and units also. Make two columns. In one column calculate for equity shares, another column calculate for units. Okay? Do it. Did you mark this question important, guys? See, two things are required in this question. One, calculate the capital gain and also calculate the tax. Done now? Guys, which is the first asset? We are computing what? Computation of capital gains. Okay. Now computation of capital gains. I'll read the question. Determine the capital gain or loss on transfer of listed equity shares, STT paid both at the time of acquisition and transfer of shares, and units of equity oriented mutual fund, STT paid at the time of transfer of units. See, when you talk about equity shares, no, the STT must be paid at both the times, at the time of acquisition as well as transfer. So it is done. Okay. And if you transfer any units, then it is required that the STT must be paid at the time of transfer only. No need to pay at the time of acquisition. It is not compulsory. May be paid or may not be paid. Okay. So now they are telling that, and tax if any payable thereon in the following cases, assuming that these are the only transactions covered under section 112A during the previous year 25-26 in respect of these assessees. So Shagun is there, purchased 300 shares in A Limited on what date? Prior to 1st February 2018. Prior to 1st February 2018 at a cost of rupees 400 per share. So this is the actual cost. He sold all the shares of A Limited on 31st May 2025 for 1200. This is the selling price. Price at which these shares were traded in the National Stock Exchange on 31st January 2018, three prices are given. Now these three prices are there. Highest trading price will be treated as the fair market value. Okay, no? So now in the case of Shagun, first we'll calculate. Okay. So in the case of Mr. Shagun, so who is the assessee? Mr. Shagun. Mr. Shagun. Shagun is individual. Status ROR. PAN dash. Previous year 25-26. Assessment year 26-27. Computation of capital gains. Now, first of all, full value of consideration, which is nothing but selling price. How much is the selling price? 1200 into how many shares? 300 shares. Okay, no? Tell me. 3 lakh. Any transfer expense? Brokerage, STT, etc. STT was there, then STT is not treated as transfer expense. No deduction for STT will be allowed while calculating capital gain. I have already told you. Okay, no? So transfer expense not there in the question. And what will be the net consideration, guys? 3,60,000. 3,60,000. Okay, sir. Less what? Cost or index cost? Cost of acquisition. What was the cost of acquisition? This cost of acquisition will be under section 55 to AC. Why? Because these shares are listed shares and you are calculating long-term gain under section 112A. Hello? And the shares are purchased prior to 1st February 2018. So the cost of acquisition you will determine as per 55 to AC. And for that you are going to take A. A means actual cost. What was the actual cost? Per share? 400 rupees per share, no? So 400 into 300 shares. Tell me how much? 1 lakh. This can be taken as cost, or you can take B, fair market value as on 31st January 2018, and that fair market value will be the highest trading price. So how much was the highest trading price? 700 into how many shares? 300 shares. This will be 2,10,000. 2,10,000. Yes or no? But this cannot be more than selling price. You remember, no? So how much was the selling price? 1,200 into 300 shares, which is equal to 3,60,000. So 210 or 360, whichever is lower, whichever is. So what is lower out of this? So 2,10,000 or 1,20,000, whichever is higher. So which is higher? 2,10,000. So the cost of acquisition will be 2,10,000. Reduce that. How much you are getting? So this 1,50,000 is what? Taxable LTCG. Under which section? 112A. Yes or no? And if you remember, I have told you that taxable LTCG under section 112A is taxable at what rate? 12.5%. But anything over and above 1,25,000 will be taxable at 12.5%. Yes or no? So out of this 1,50,000 on 1,25,000, how much will be the tax? Nil. Tax will be nil. And on the balance, 1,50,000 minus 1,25,000. Yes or no? On the balance at the rate of 12.5%. That will be how much? Tax is equal to 3,125. Done, sir? Nil plus 3,125. Tax is equal to 3,125. So how much tax Mr. Shagun will pay? And why you have called this as a long-term capital gain? Period of holding will start from 1st of, when did he purchase? 20th May 2017, no? So 20th May 2017 to date of sale. Date of sale is 31st May 2025. 31st May 2025, which is more than 12 months. Therefore, the asset is a long-term asset and we have calculated the long-term gain. That long-term gain, the tax also we have calculated. Done, sir? Sure, sir? Now for Shagun we have calculated. In that same way we are going to calculate for Raj. So, Mr. Raj. Mr. Raj. Raj is an individual, no? What do you think? Sure. 10 dash. Previous year 25, 26. Assessment year 26, 27. Computation of what? Computation of, sir, capital gains. And to calculate the capital gains, we are calculating the capital gains. What we are going to take? Full value of consideration, which is nothing but the selling price. Now tell me, What Mr. Raj is selling? First of all, Raj has purchased 200 units of equity-oriented fund, Fund A, on 1st of February 2017. He has also purchased prior to 1st February 18. Prior to 1st February 18. On 1st February 17 he has purchased. Yes or no? At a cost of 550. Units were not listed at the time of purchase. At the time of purchase, the units were not listed. But later on it got listed, and on 31st January, it was traded also in the market. Yes or no? So as on 31st January 2018, they were traded in the market at a highest price of 750. So this 750 can also be taken as cost. Getting my point? Or the actual cost, whichever is higher. But remember, the 750 cannot be more than selling price. What was the selling price? 900. Okay, so we can take 750 or 550, whichever is higher. We'll take 750 as the cost and 900 is the selling price on 3rd April 2020, 25. Yes or no? So selling price is how much? Tell me. 900 rupees. And how many units? 200 units. Tell me. 180. Everyone got this? What was the transfer expense? Transfer expenses nil. So net consideration is how much? Net consideration is how much? 180 minus what? And cost of acquisition under which section? Under which section? How to calculate? A or B, whichever is higher. So A is actual cost. Sir, what's the actual cost? 550 into 200 units. 1,10,000. Or B, fair market value. As on what date? 31st January, no? 31st January 2018. Which was 750 into 200 units. Which is how much? 1,50,000. Or cannot be more than selling price. And how much was the selling price? 900 into 200 units, which is 1,80,000. So 150 or 1,80,000, whichever is lower. $1,50,000. 150 or 1,10,000, whichever is higher. So 1,50,000 will be the cost of acquisition. That you reduce out of 1,80,000. So 30,000 will be your long-term capital gain, taxable long-term capital gain under section 112A. Okay. Why this long-term? So we check the period of holding from 1st February 2017 to 3rd of April 2025, which is more than 12 months. Therefore, long-term and long-term gain. Yes or no? And the tax under section 112A will be nil, because the gain is up to, since LTCG is not more than 1,25,000. So whatever gain up to 1,25,000 on that, the tax will be 0. Understood? Will you be able to solve the question like this? 4 marks, 4 to 6 marks minimum. 6 marks will be there. Minimum 6 mark question. 3 marks for this and 3 marks for this. Done, sir? Same type of presentation you can do in the exam. Very good. So, sir, one more question. One more question. But before that, few concepts we are going to do. Few concepts. Sure, no? Okay, sir. Write down one question first. Write down one question first. This is the facts of the case. This. Can you see? Write down this question. Don't write in the paragraph form. Okay. Write down this is the question. And give me the answer of this question. Come on, fast. You remember, no, section 47? Or you don't remember? Write down. I am dictating the question. Write down. Mr. A acquired a capital asset on 9909 for rupees 1 lakh. For rupees 1 lakh. He incurred cost of improvement of rupees 1 lakh in 2012-13. He incurred cost of improvement of rupees 1 lakh in 2012-13. Full stop. He transferred this capital asset to Mr. B by way of gift. By way of gift. In the previous, on 11 December 2013. On 11 December 2013. Full stop. Mr. B also incurred. Mr. B also incurred rupees 1,25,000. Rupees 1,25,000 as cost of improvement in the year 18-19. Previous year 18-19. On 1/1/19. On 1/1/19. 1st January 2019. Yes or no? Full stop. Later on, Mr. B sold the above capital asset. Later on, Mr. B sold the above capital asset to Mr. C on 12 July 2025 for rupees 10 lakhs. For rupees 10 lakhs. Full stop. Compute the capital gain, comma, determine the nature of gain, and also tax on such capital gain. Will you be able to do it? Huh? Start. Start, guys. Start. And the same question, no, I will give you one more question based on this question. And then I will add few informations in the question. This is a very simple question which I have gave just now. Yes or no? Same question, some extra information also I will give. Then what will be your answer? Okay? Start. Do it fast. Come on. Come on, guys. Come on. Fast. Previous year 13-14. Which previous year? That is assessment year 14-15. In that year, who has transferred? Mr. A has transferred to Mr. B by way of gift. So Mr. A has transferred the capital asset to Mr. B by way of gift. Such transfer is an exempt transfer under section. Hence, no capital gain is taxable for Mr. A. Done, sir? This will happen in 13-14, 14-15. Now, coming to the previous year. 25-26. Assessment year 26-27. In this year, Mr. B has sold the above capital asset to Mr. C. Hence, this transfer is a taxable transfer in the hands of Mr. and capital gains is taxable for Mr. B, which is to be computed in following manner. Okay, sir. Did you understand? Full value of consideration. We are going to take selling price only, no? So what was the selling price? 10 lakh rupees. Minus what? Any transfer expense there or not there? Not there. So net consideration will be? Sir, net consideration will be 10 lakhs. Yes or no? Minus cost of acquisition. What is the cost of acquisition? For that, working note has to be done. Cost to previous owner will become cost in the hands of current owner. So what was the cost in the hands of previous owner? So in the bracket I will write down here cost to Mr. A, that is previous owner, shall be deemed to be cost of acquisition under section 49(1), since Mr. B has acquired the capital asset. Capital asset by way of gift. That is a mode specified under section 49(1). Did you understand this? Why we have taken this cost? We have taken cost of Mr. A, that is previous owner, shall be deemed to be the cost of acquisition for Mr. B as per section 49(1). Since B has acquired the capital asset by way of gift, which is the mode specified under section 49(1). So what is the cost, sir? Sir, what is the cost? 1 lakh. Sure it was 1 lakh, no? See, I am believing you. Minus cost of improvement. Now cost of improvement which is incurred by Mr. A also. Mr. A deemed to be the cost. Deemed to be the cost for Mr. B under section 49(1). Right now? And Mr. B also has incurred some cost. So Mr. A has incurred the cost. Tell me how much? Cost of improvement 1 lakh. And Mr. B has incurred the cost of improvement of 1,25,000. Do the plus minus. 10 lakh minus 1 lakh minus 1 lakh minus 1,25,000. 6 lakh. This is long-term capital gain. Taxable long-term capital gain under section 112. And why are you calling it long-term capital gain? Since period of holding. From where you are going to start the period of holding? 9/9/2009 to date of transfer, no? When Mr. A transferred? 12th of July, meaning till 11th only, no? 11th July 2025. So this period of holding is more than 24 months. And why did you take from here? Period of holding of Mr. A, who is the previous owner, is also included in the period of holding of Mr. B, since capital asset was acquired by way of a mode specified under section 49(1), that is gift. So hence period of holding of Mr. A is also included in the period of holding of Mr. B. So instead of taking it from 13-14, we have took it from 9-10. We have not taken the period of holding from here to here, rather we have taken the period of holding from here to here. Yes or no? Okay, sir. So this is understood, everyone? Capital gain, did you calculate? Now tax also has to be calculated. Come on. Tax on LTCG under section 112. See what type of asset it is given in the question. Is it given in the question? Did I tell you that the asset is a immobile property? Then will you assume it is a immobile property? Any hint given in the question that asset is long stamp duty value, then some cost of addition, alteration in that. See, cost of improvements are happening. That is a hint that improvements can be done in immobile property. Improvements cannot be done in other assets. No? What cost of improvement you will do in other assets? In jewelry, will you do improvements? In shares, will you do improvements? So if cost of improvement is given, meaning that the asset might be a immobile property. Yes or no? So here no, you write one assumption. It is assumed. It is assumed that capital asset is an immovable property. Since cost of improvement and everything is there, no? So this assumption is more suitable. Yes or no? Now tell me, tax on LTCG. LTCG without indexation. So what was that LTCG? 6,75,000. On that, tax at the rate of 12.5%. How much? 84,375. This is your tax 1. Done, sir. Now we are going to calculate LTCG with indexation. How will you calculate? Same calculation. So we'll take full value of consideration till net consideration, everything will be same. Only the cost of acquisition and cost of improvement will be index. Yes or no? So FVC minus transfer expense, you will get net consideration minus what? Index cost of acquisition. Guys, index cost of acquisition, what cost of acquisition you are going to take? 1 lakh into CII of year of transfer. What is the year of transfer? 25, 26. That will be 300 and now divide by CII of year of acquisition. Come here, see. Mr. B acquired the asset in 13-14. So CII of 13-14 if you take, so CII of 25-26 divided by CII of 13-14, meaning you are taking the indexation only for this period. Is it correct? Yes, it is correct as per law. But there was a case law, Manjula Ben, Jayantilal Shah versus CIT, Bombay High Court. As per that judgment, it will be assumed as if the assessee has acquired the capital asset for the first time in the previous year in which it was acquired by the previous owner. So accordingly, the indexation for this period should also be allowed. Yes or no? So instead of dividing the CII of 13-14, I will divide the CII of 9-10. And I am doing it as per the judgment of Bombay High Court in the case of Manjula Ben Jayantilal Shah versus CIT. And for that I will give a note also there. I have done the same thing in one more question earlier, if you remember. Okay, so pay attention. Divide by 9-10. What is the CII? 148. Be very careful here. This is important. This 148. Now calculate. 2,54,054. Okay. And what are you going to write here? Indexation allowed with effect from previous year in which capital asset first held by Mr. A. That is your previous owner. As per the judgment of Honorable Bombay High Court in the case of Manjulaben Shah versus CIT. Done, sir? Now index cost of improvement also we are supposed to reduce. Less index cost of improvement. Now index cost of improvement, there are two cost of improvements, no? Tell me yes or no. Incurred by Mr. A. By Mr. A. A incurred in which year? 12-13, no? A incurred in which year? 12-13. Can you see? This 1 lakh. So 1 lakh into 376 divided by CI of 12-13. How much? 1. 12-13 CI is 200, no? So tell me how much? 1,88,000. This will be 1,88,000. One more indexation. One more cost of improvement by Mr. B. And B incurred in which year? Previous year? 18-19, no? 18-19. So B incurred 1,25,000 into 376 divided by CI of 18-19 is how much? 280. 280, no? Did you check the CI properly, no? Tell me how much index cost? 1 lakh 851. 167 857. Done. Total 90,000 089. Can you calculate your long term gain now? 10 lakh minus 254 054 minus 390 089. How much? Sorry. 3,90,089. You all are excellent people, you know. Very excellent people. I am asking you the total of this and you are giving me LTCG. Wow. Total of this 3,08,57. And your capital gain is this much, no? Now it is correct. On this capital gain, you are going to calculate tax. At what rate? 20%. Calculate. 78,018. This is your tax 2. This is your tax 2. So therefore, tax on LTCG under section 112 is lower of tax 1 and tax 2. Tell me how much you would love to pay. Will you like to pay 84,375 or you would like to pay 78,018? Sure. So your tax will be 78,018. Done, sir? This is the tax on your long-term gain. Now, write down. What would be your answer to above question? Write down. What would be the answer of above question if in the above question following additional informations are also given. Number 1. Advance money received and forfeited by Mr. A. By Mr. A. By Mr. A. In the bracket write down in previous year 11-12 rupees 10,000. Done. Next line write down by Mr. B. In the bracket write down in previous year 13-14 10,000. Sorry, 15,000. Next line again in previous year 17-18 20,000. So Mr. A has also received advance money and forfeited prior to 1st April 2014, and Mr. B has also received and forfeited advance prior to 1st April 14 also, and on or after 1st April 2014. Yes or no? This is first information. Write down second information. Number 2. Mr. Date of sale agreement. Date of sale agreement with Mr. C. So when B is selling to C, yes or no? At that time, date of sale agreement. April 2025. 4th April 2025. In the bracket write down HDV is equal to. No, don't do this thing. This you have done a lot. In 2 questions you have done this thing, no? Cancel this entire information. Write down information number 2 again. Information number 2 again. Because this thing I have already taught you in 2 or 3 questions. Yes or no? Now something new should happen here. Okay. Write down information number 2. The stamp duty value. Write down the stamp duty value of the property was rupees 16,80,000. 16,80,000. However, Mr. B did not accept. Mr. B did not accept such stamp duty value. And he made an application to the AO in this regard. Full stop. AO referred the case to VO. VO means valuation officer, who determined the value. AO referred the case to VO, who determined the value of such property equals to 12,50,000. 12,50,000. 50,000. What will happen here? Tell me now. So now if you will take full value of consideration 10 lakhs, no, you are gone. Because that 10 lakh is less than stamp duty value. Yes or no? And stamp duty value is 16 lakh 80,000. But are you accepting that stamp duty value? Rather you have given an application to the AO saying that AO, the fair market value is lower than stamp duty value, and as a result of that I am getting less sale consideration. If you don't believe me, get the valuation done. So AO referred the case to VO and VO determined the value 12 lakh. VO's value is less than stamp duty value, meaning the assessee is correct. Taking stamp duty value as full value of consideration will unnecessarily put the assessee in trouble. So the VO's value will be taken as full value of consideration. How much is that? Which is still more than your sale consideration. Understanding? Now you don't have to see the difference. Difference between VO's value and your sale consideration should also be more than 10%. No. VO's value is higher. VO's value will be taken as your full value of consideration. But stamp duty value will not be taken. Understanding? So this is a new information which you are going to see for the first time. If this type of thing comes in the exam, your full value of consideration can be accordingly updated. Yes or no? Write down third information. That same question can have these informations. Yes or no? Then accordingly your answer you will have to update. Done? Third information. Brokerage paid at the time of purchase of this property in previous year 9-10 by Mr. A. 10%. 10%. And next line. At the time of transfer by Mr. B at the rate of 15%. 10% of what? Purchase price will be paid by A. That will increase the cost of A, will become actual cost. So now actual cost of A will not be 1 lakh, actual cost of A will be 1,10,000. That will be deemed to be your cost. Yes or no? And at the time of sale also the brokerage is paid. So this will be reduced as your transfer expense. So 15% of what? 15% of selling price. Remember, brokerage is paid at the time of purchase on purchase price, at the time of sale on sale price. Always apply the rates on purchase price and sale price. Yes or no? So that will be reduced as the transfer expense. What extra information you want in this question? That's it. Will you be able to solve this question now? Solve. Now in that question again 13-14, A is transferring by way of gift, no capital gain. In the year 25-26, when you will calculate the capital gain of Mr. B, at that time these informations will be useful. Solve in the same manner in which you have solved the last question, guys. Archita, Big Boss is watching you all. I'm updating the solution, huh? Guys, see. Everyone, pay attention. I'm updating my solution. First thing, will there be any capital gains for Mr. A? No. Why? Because he has transferred the asset by way of gift. It is an exempt transfer. In 13-14, there will be no capital gain. In 25-26, in 25-26, will there be capital gains? Yes. In the hands of B, because B is selling the property to C. Okay. So here, now we are going to calculate what? FVC. Full value of consideration as per working note 1. Done, sir. Minus what? Any transfer expense there? Transfer expense 15%, no? 15% brokerage. So 15% of what? Selling price. What was the selling price? 10 lakhs. Ayyo. 15% is too much, no? Okay, not an issue. Let it be. 1,50,000. And that we are going to reduce and we are going to get what? Net consideration. Minus cost of acquisition. For that we will make working note 2. Okay. Minus cost of improvement. For that also we will go and make working note 3. Done. And the capital gain will be there. Long term gain. So first working note number 1. That is for your full value of consideration. Now tell me, sale consideration is how much? Sale consideration of 10 lakhs. Is it less than stamp duty value? What is the stamp duty value given? 16 lakh 80. So now see, now there is no confusion about stamp duty value. One amount of stamp duty value which you have to take either on the date of registration or date of sale agreement. That stamp duty value itself they have given in the question. So we are not supposed to bother about that. Okay, no? So now tell me, what is the difference? Difference is equal to 6,80,000. Is this difference more than 10% of sale consideration? That is 1 lakh. Tell me yes or no. Therefore, 50C will apply. And as per 50C, what will be the full value of consideration? Stamp duty value, which is 16,80,000. Okay, no? But if this 16,80,000 will be taken, then the assessee will be in problem. Given in the question that assessee is not accepting this stamp duty value. So he is writing a letter, application to the AO that please don't take this stamp duty value. So AO referred the case to VO and VO determined the value. So this stamp duty value will be ignored. This stamp duty value will be ignored and we are going to take the VO's value. VO's value which was 12,50,000. Why? Since VO's value is less than stamp duty value. Yes or no? VO's value is less than stamp duty value. So this VO's value will be taken as full value of consideration since it is still more than your sale consideration. Understanding? So here what should I write? 12,50,000. I hope you understood the working note number 1. Minus 1,50,000 will give you 11 lakhs. Now cost of acquisition you are supposed to determine. So working note number 2. Working note number 2. That is for cost of acquisition. So first we'll determine the cost of acquisition of Mr. A, who is the previous owner. Yes or no? Cost of acquisition of Mr. A, who was the previous owner of the property. So what is the cost of acquisition of Mr. A? Tell me. Actual cost only, no? Tell me actual cost, which was 1 lakh plus 10% brokerage paid at the time of acquisition. So that will be 10,000. 10,000 plus 1 lakh will be 1 lakh 10,000. This is the actual cost in the hands of Mr. A. This is the cost of acquisition of Mr. A. And this 1 lakh 10,000 shall be deemed to be COA in the hands of Mr. B under section 49(1), as Mr. B has acquired the capital asset by way of gift. By way of gift, that is a mode specified under section. Mode specified under section 49(1). Therefore, cost of acquisition of Mr. B will be how much? Tell me. 1 lakh 10,000. But out of this, now I will have to do the adjustment of advance money received and forfeited. Advance money received and forfeited. Now advance money received and forfeited, adjusted. Some advance money was received and forfeited by Mr. A, will not be adjusted out of the cost of Mr. B. Yes or no? So advance money received and forfeited by Mr. A in which previous year? In previous year 11, 12. How much? 10,000, no? So I will write down 10,000 and I will cancel this. And I will write down not adjusted under section 51 out of cost of acquisition of Mr. B. Done. So from the cost of acquisition of Mr. B, only the advance money received and forfeited by B will be adjusted, not the advance money received and forfeited by Mr. A, who was the previous owner. So if you are an assessee, adjust the advance money received and forfeited by you only. Understanding? So did Mr. B receive any advance money and forfeited by Mr. B in which previous year? In previous year 13-14, meaning prior to 1st April 2014. How much was that amount? Only this 15,000 will be adjusted. And one more advance money is received and forfeited by him. Yes or no? In previous year 17-18. How much was that amount? 20,000. Yes or no? Will you adjust this 20,000? Why not? Because this is received on or after 1st April 2014. So since this is already taxed, under the head IFOS in previous year 17-18 only, so this is not to be adjusted. Therefore, no adjustment under section 51 is required. Hence we are ignoring this. So out of the 3 advance money received and forfeited, only 1 advance is adjusted out of the cost. Yes or no? Advance money received and forfeited by previous owner cannot be adjusted. Advance money received and forfeited by you, but honor after 1st April 2014 can also not be adjusted. Yes or no? So out of 1,10,000, you will adjust only 15,000. So total is 95,000 now. Understood, sir? This will be your cost of acquisition. So now go and write down cost of acquisition how much? 95,000. Cost of improvements incurred. For that, working note number 3. Working note 3. Cost of improvement incurred by Mr. A. In which previous year? In previous year 12-13. Yes or no? And incurred by Mr. B. In previous year 18-19. Both will be considered, no? So 1 lakh plus 1 lakh 25,000. Both will be considered. So total cost of improvement will be 2,25,000. Done, sir? The same thing was there in the last question also, no? So 2,25,000. Now calculate the capital gains. 7,80,000. Everyone got this? This is your taxable LTCG under section 112. Why LTCG, sir? You know, same as above. Same as above. What same as above? You are taking the period of holding from this date to this date. Yes or no? And the same thing you are going to write there. Same thing. Okay? This is not going to change. This will remain same. Will you be able to write this? Hello, sir. Copy, paste, write down. Do it fast. Finish. Write down this. Period of holding from 9 September 2009 to 11 July 2025, which is more than 24 months. And you have also included the period of holding of the previous owner because the asset was acquired by way of mode specified under section 49(1). So previous owner's period of holding is also included in your period of holding. Yes or no? Easy or not? These are the most difficult questions which can be asked in capital gains. Most difficult questions. There cannot be a question difficult than this, which you are solving right now. In one question only, they will put many informations. 50C will also be applicable, 49(1) will also be applicable, there will be some exemption under section 47. They will tell you to calculate the tax also. Understanding or not, I don't know. Did you write this? Everyone? Did you write this? Now let's move on. Now we are supposed to calculate the tax also, no? So what was the capital gain? 7,80,000. 7,80,000. So now you are going to calculate the tax. On what? LTCG under section 112. And this tax will be on LTCG without what? LTCG without indexation was 7,80,000. On that, the tax will be at the rate of 12.5%. How much? 97,000. This is your tax 1. Tax 1. What are you going to do now? Are you supposed to calculate the LTCG with indexation also? So now your LTCG with indexation. And this is very easy. Every data we are going to take from above, but we are just supposed to index. Done, sir? So, this will remain same. Up to net consideration, everything is same. So full value of consideration is 12,50,000. Okay, transfer expense, same thing. Net consideration 11 lakhs. Minus what? Cost or index cost? Less index cost of acquisition. What was your cost of acquisition? 95,000. Into CII 376. Now there will be a problem here. Divided by CII of which year? Manjula Ben judgment. Hello. So we'll take the indexation from the year in which the asset was acquired by Mr. A. And what was that CII? 100 and 2009-10, no? The asset was acquired by Mr. A in 2009-10 and the CII is 148. We did the same thing in the last question also, no guys? So this 148 we are taking. And why we are taking this 148? We are supposed to give the note. Note as above. Note as above. So in the last question, whatever note we have given, we are supposed to give that same note here also. Understanding? I'm not writing that again. And you also don't write. But if you will not write, how will you be able to write down that in the exam? Once extra you are supposed to write. No, write it right now only. Don't write like this, as above. Otherwise you will never write. What is the amount? 2,351,000. And now see index cost of improvements. There are two cost of improvement. One in previous year 12-13 and one in previous year 18-19. Yes or no? So previous year 13-14. How much? 12-13. How much? 1 lakh into 376 divided by what is the CII? 12-13. 200, no? That will be same. How much? 1,88,000. And previous year 18-19, how much was the cost of improvement? 1,25,000 into 376 divided by 18-19 CII is 280. How much? 1,67,000. Reduce this and find out the final capital gain. 5,792. Everyone getting this? Tell me yes or no. Sure everyone? So on this, now we are going to calculate tax. Tax at what rate? Calculate. 1 lakh? One lakh 558. This is the tax on long-term gain with indexation. Yes or no? This is tax 2. So this time which tax would you like to pay? 97,500 or you would like to pay 1 lakh? So tax on LTCG. Tax on LTCG under section 112 is lower of tax 1 and tax 2. Tell me how much? 97,500. This is the end of this question. Done, sir? Easy, difficult? Thank you so much. Thank you. Thank you for understanding. So now we'll take a break, and after the break we'll continue. Have proper lunch so that after the lunch you can sleep properly. Okay? The last part of the chapter we'll complete after the break. Okay? Until the time we are not completing this chapter today, we are not going home. Okay? We'll take a little longer today, but we'll complete today so that from tomorrow we can start with the new chapter. Okay, no? And if the lecture will be extended till 6 now, I'll give you a break in between also. Small break. Okay? Today I have to finish the capital gains. So please bear with me today. Every day I'm leaving at you 5 o'clock now. So today, till the time we are not completing this chapter, we are not going home. Okay? Okay. Take a break. 1 hour.